Good day, and welcome to the Global Sources fourth quarter and year-end 2014 results conference call. Today's conference is being recorded. At this time, I would like to turn the conference over to Kathy Manson of LHA. Please go ahead.
Thank you, Heather, and I'd like to thank everyone for joining us today for the Global Sources fourth quarter and year-end 2014 earnings conference call. Speaking on the call today are Merle Heinrich, Executive Chairman, and Connie Lai, Chief Financial Officer. If anyone has not yet received the earnings press release, it is now available at the company's website at globalsources.com. If you would like to be added to our distribution list, or if you would like additional information about Global Sources, you may call LHA at 415-433-3777. A telephone replay of this call is scheduled to be available until April 2nd, 2015, and the dialing instructions are included in the press release. The replay is also scheduled to be available on the Investor Relations page of the company's website for at least 30 days. Before I turn the call over to management, let me remind you that this call will contain forward-looking statements. Investors should be aware that any forward-looking statements are based on assumptions and are subject to risks and uncertainties that could cause actual results to differ materially from those discussed here today. These risk factors are explained in detail in the company's filings with the Securities and Exchange Commission. Global Sources does not undertake any obligation to publicly update or revise any forward-looking statements, whether as a result of new information, future events, or otherwise. Management has provided certain measures that are not in accordance with International Financial Reporting Standards, or IFRS. Management believes non-IFRS metrics are useful measures of operations and provides IFRS to non-IFRS reconciliation tables at the end of the earnings press release. Global Sources defines non-IFRS net income as net income excluding non-cash, SBC expense or credit, amortization of intangibles as it relates to certain equity compensation plans, profits or losses on acquisitions and investments net of transaction costs, and related tax expenses, and or impairment charges net of related taxes for all historical and future references to non-IFRS metrics. Non-IFRS EPS is defined as non-IFRS net income divided by the weighted average of diluted common shares outstanding. Adjusted EBITDA is defined as earnings before interest, taxes, depreciation, amortization, stock-based compensation, impairment of goodwill and intangible assets, and profits or losses on acquisitions and investments net of transaction costs and related tax expenses. Management would like to remind you that the non-cash stock-based compensation charge is a charge to the income statement and a corresponding credit to additional paid-in capital. Hence, there is no impact on shareholders' equity. I would also like to remind you about Regulation FD restrictions. The company's official spokespeople to the investment community are Merle Heinrich and Connie Lai. And now I would like to turn the call over to Mr. Heinrich. Please go ahead, sir.
Thank you, Kathy, and thank you all for joining our call today. For the fourth quarter, we reported revenue of $62.9 million and achieved IFRS and non-IFRS earnings per share of 29 cents and 31 cents, respectively. We closed out the year with a strong balance sheet and no debt. In 2014, we made progress on improving our overall revenue performance. We enhanced our online and trade show offerings while closely managing costs. We continue to drive the integration of our services with the belief that a combination of online and show services can provide a unique and high value to our customers. As a result, we improved our competitive positioning, and I'm pleased with the solid result we delivered for the year. In the fourth quarter, we held our fall China sourcing fairs in Hong Kong. We had more than 7,500 booths at the Asia World Expo, and buyer attendance exceeded 75,000 from more than 148 countries and territories. Many of these buyers represented very large importers, including, to name a few, Amazon, Foxconn, Intel, Lenovo, Monster Products, Nike, Panasonic, Samsung, and Woolworths. Our long-established electronics show and our new mobile electronics show, which featured the latest smartphones, tablets, wearables, and accessories, were the most notable performers. Combined, they were an overwhelming success, with overall buyer attendance up more than 36%. In the emerging markets, China sourcing fairs were held in Johannesburg. Our private sourcing events continue to distinguish us in the market and demonstrated the tremendous buying power to which we introduced our clients. In 2014, private sourcing events were held for some 220 sourcing teams from over 114 buying organizations. These events created more than 1,200 high-quality, one-on-one selling opportunities for our customers. Now I will turn the call over to Connie, after which I will conclude comments about our strategy and direction. Connie?
Thank you, Mr. Herrick. I will now review our financial results for the fourth quarter of 2014 as compared to the fourth quarter of 2013. Total revenue was $62.9 million as compared to $16.1 million. Online revenue was $19.5 million as compared to $21.7 million. Exhibitions revenue was $38.2 million as compared to $33.2 million. Print service revenue was $2.9 million as compared to $3.3 million. Total operating expenses were $53.8 million as compared to $56.2 million. Interest income was $268,000 as compared to $384,000. During the fourth quarter of 2014, we recorded a foreign exchange loss of $1.3 million due to the devaluation of the yuan as we continue to be exposed to the fluctuation in the currency. IFRS net income was $9.3 million, or 29 cents per diluted share, as compared to IFRS net income of $5 million, or 14 cents per diluted share, in the fourth quarter of 2013. Non-IFRS net income was $9.9 million, or 31 cents per diluted share, as compared to $10.9 million, or 30 cents per diluted share. Adjusted EBITDA for the quarter was $12.2 million, as compared to $13.1 million. Now, for the full year end December 31st, 2014, as compared to full year end December 31st, 2013. Revenue was $198.2 million as compared to $197.5 million. IFRS net income was $18.3 million, or 55 cents per diluted share, as compared to $32.7 million, or 91 cents per diluted share. Non-IFRS net income was $22.5 million, or 67 cents per diluted share, as compared to $30.2 million, as compared to $13.2 million, or 84 cents per diluted share. Adjusted EBITDA was $37.3 million, as compared to $40.4 million. Now, onto our balance sheet as of December 31st, 2014, as compared to December 31st, 2013. As a reminder, in June 2014, the company completed a cash tender offer for 5 million issued and outstanding common shares at a purchase price of $10 per share in cash. Cash and security as of December 31st, 2014, totals $98.5 million as compared to $143.8 million. Our short-term deferred income and customer prepayments were $84.9 million as compared to $84.7 million. Total assets as of December 31st, 2014 were $314 million as compared to $339.1 million. Also, we continue to have no short-term or long-term bank debt. Days sales outstanding were 5 days as compared to 7 days. We continue to build our shareholder value by growing our retained earnings. Retained earnings as of December 31st, 2014 were $209.9 million as compared to $191.6 million. Total shareholder equity was $171.6 million as compared to $204 million. Now, onto our guidance for the first half of 2015. Under IFRS, for the first half of 2015 ending June 30th, 2015, our revenue is expected to be between $90 million to $92 million. compared to $92.8 million for the first half of 2014. IFRS EPS is expected to be between 15 cents to 19 cents as compared to 20 cents per diluted shares in the first half of 2014. Stock-based compensation and the amortization of intangibles as it related to certain equity compensation plans are estimated to be an expenses of 4 cents per diluted shares for the first half of 2015. Non-IFRS EPS is expected to be between 19 cents to 23 cents as compared to 28 cents per diluted shares in the first half of 2014. The shares used in the diluted net income per share calculation for the first half of 2015 are approximately 31.7 million as compared to approximately 35.7 million for the first half of 2014. Adjusted EBITDA is expected to be between 12.9 million and 14.1 million as compared to 17.7 million in the first half of 2014. Now, go back to Mr. Henrik.
Thank you, Connie. Next, I will provide an update on our strategic direction. In 2014, we improved our competitive position in our core business of connecting global buyers with suppliers in mainland China and elsewhere in Asia. We continue to develop new offerings for our customer base that includes many of the larger buyers and suppliers that account for a majority of the trade. In 2015, we are looking to improve our platform and our services to both buyers and suppliers. As we demonstrated with our new specialized vertical offering in mobile electronics, we are well positioned to create unique offerings that strengthen our position in our core markets. In February, we launched the latest version of the mobile electronics site, plus 3 additional vertical offerings, which were consumer electronics, security products, and electronic components. Our new online marketplace provided our sellers and buyer communities with distinct sourcing advantages. New product coverage is updated daily with products from the entire Asian supply market and including Asia's biggest brands and OEM manufacturers. For each vertical, we aim to offer buyers the most qualified supplier database with intense focus on including suppliers who have exported, exhibited, or have been audited. In addition, exclusive reports, research, and analysis help buyers keep up to date with key issues that are expected to impact their sourcing. We are excited by the progress we are making with these types of vertical specialized offerings, and we plan to announce additional offerings later in the first half of 2015. Overall, we remain focused on integrating the best of online with the best of trade shows to help our respective customers buy or sell more effectively and more profitably. In summary, we have a strong foundation for the future with a strong balance sheet and a solid cash position and no debt. We're pleased with the long-term positive trend of our exhibition business, and we are leveraging our online business in creative new ways to achieve overall growth. We have a strong position in the domestic mainland China business. And now, operator, please open the call for questions. Thank you.
Certainly. If you would like to ask a question, please signal by pressing *1 on your telephone keypad. If you are using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Again, press *1 to ask a question. We'll pause for just a moment. Again, that's *1 to ask a question. I show no questions at this time. I'd like to hand the conference back over to Mr. Heinrich for additional or closing remarks.
Thank you, operator, and we look forward to seeing all of our investors and listening to them at the next call. Thank you.
That does conclude today's conference. Thank you for your participation.